Friends, we will make a beginning with the new topic, that is tax deduction at source. Friends, in this particular series, with respect to the taxes, before I get into this, how this is being grouped. Like when an assessee earns income, what are the different modes by which government is going to have the tax? First thing that they said is, you go for the self-assessment tax. What is the self-assessment tax? After your financial year is over, you prepare your profit and loss account, or you group all your incomes, and thereafter you take the deductions and all the reliefs which are available under the Act, find out the tax payable, and that amount you can pay it in the form of self-assessment tax, and make the payment of self-assessment tax and file the return. Why it is called a self-assessment tax? Because you are computing what is your taxable income and tax thereon and paying the self-assessment tax. Now the point is, when the government say like that, what is happening? It is, by the end of the financial year, some people, fortunately or unfortunately, going to spend all the amount, thereby for paying the taxes they don't have the money. So this brought the concept of TDS into play. That is, instead of waiting till assessment year, instead of giving that task of paying the tax to the assessee himself, let us put the responsibility on the payers who is going to give the income to this particular assessee. See, generally what is the concept? If you ask me to pay my tax, I will ask 101 questions. Where is the accountability to the government? Where my money is going and all that. If you ask me to deduct the tax of what I require to pay to Mr. Krishna Reddy, probably I may say, Mera Bharat Mahan. So this brought the concept of TDS, tax deducted at source. Obligations are now kept on the payers, and a prescribed list of payments against which TDS is to be deducted, subjected to what conditions and all. That's how the concept of the TDS is coming into the law book. Then government is in need of so much of the money, because many times you see our budgets are deficit budgets only. Budget ka matlab kya hua dost? How the money gets raised and how it is going to be spent. What the government is proposing to spend is more than what the government raised by form of the taxes. If expenditure is more than the proposed income, that is a deficit budget. So government always is in need of money. So that brought the concept of advance tax into the play. Advance tax बहुत अजीब concept है, because if you see the advance tax, how it is, you coolly sleep, estimate your possible income, calculate the tax thereon, and pay that tax in different installments. And if there is any failure to pay the tax, advance tax, or what the you have paid is 90%, below 90% of what advance tax you require to pay, then we levy the 234B interest. If there is any shortfall in the amount that you paid in the installment amount, then we will levy 234C interest. Like this, these concepts were all brought into the law book, and a failure to comply with these TDS requirements or that advance tax requirements or that self-assessment tax requirements, SSC is exposed to the interest and different penalties. So in this context, now this particular group of topics are TDS, advance tax, then you have got refunds, then you need to study in all this what is the interest and what are the penalties. Like this we are grouping this whole issue. Now to start with the tax deducted at a source, what exactly the points on which this particular chapter is? Point is, deduction of taxes on specified payments at specified rates. Not that all the expenditure that you are debiting against the P&L account will attract the TDS. There are specified payments for which at a specified rate you need to deduct the tax at source. And second important point is, what you have deducted need to be deposited within prescribed time limit. Then after having deducted and paid, you have to file a return of income, return of that TDS return. Then you have to issue a certificate to the payee that so much of the tax is being deducted and it is being remitted to the government. This is the challan number. With all that, a certificate is to be given. Then at the end of the department, that TDS return gets processed, and in case of any failure can come in what forms? Failing to deduct the tax at source, failing to remit the tax, failing to file the return, failing to issue the certificate to the payee. All these non-compliances will attract the penal provisions. So now you should also understand one point, which is most important point. See, generally on tax you studied there is surcharge and educational cess and secondary higher educational cess. Fortunately, with respect to the TDS, there is no surcharge and educational cess in case if the payee happens to be a company and a resident company. And if the payee happens to be any other SSC other than company but resident, there also there is no need for any surcharge. Of course, as far as educational cess is concerned, it is also not required except for the salaries. Against a salary income and TDS you are deducting, on that educational cess concept is there. Then friends, in case of a non-resident SSCs, if you are a foreign company, payee happens to be a foreign company, not the payer, payee happens to be a foreign company, a surcharge of 2%. Of course, where the payments made to the payee are exceeding that 1 crore. If 1 crore it is a payment is exceeding, surcharge at 2%. In case of any other SSE, what we say, there is no surcharge if he happens to be a non-resident. But once you happen to be a non-resident, whether you are a company SSE or any other SSE, educational cess at what percent? 3% is to be levied. But for resident SSEs, you don't have even that concept of educational cess also, except if it is a case of salary payment. So this is the most important thing, so make note of it. That is surcharge and educational cess, surcharge and educational cess on rates of TDS. In case of, point number 1, in case of resident SSEs, there is no surcharge and educational cess. Except in case of salary payment, educational cess at 3%, educational cess at 3% shall be added on the salary. On the TDS on salary. On the TDS on salary. Then friends, second point, in case of non-resident SSEs, there is no surcharge, except in case of foreign companies, where payment to the foreign company, exceeds rupees 1 crore during the financial year. And surcharge is at 2%. Next, in case of non-resident SSEs, educational cess at the rate of 3% shall charged. Now friends, look at 206 AA. What is this 206 AA? See, today TDS is a subject by itself, because slowly government is enhancing year after year number of services on which service tax is leviable and a number of payments on which TDS is required to be deducted at source. Now the point is, today e-filing of TDS returns, e-payment of the TDS, so many beautiful concepts are brought into. Now when I want to file the return, let us suppose Krishna Reddy is a professional rendering some services to Mr. Chakravarti. Chakravarti deducted the tax at source. Now I want to file TDS return. If Krishna Reddy don't give the PAN number, then it would be very difficult. Because tomorrow it is difficult for Chakravarti as well as Mr. Krishna Reddy. Because Krishna Reddy cannot claim this TDS because it's not getting picked up in the form 26 AS. For Chakravarti, while filing the TDS return, issues are coming that you have to necessarily obtain the PAN number at least to the tune of this percentile and all. Earlier it used to be. This is the procedural angle of it. But the law, when it smoothly tell, nobody will comply with. If law says, please furnish your PAN details to the payers who are going to deduct the tax at source. Some illiterate, tax illiterate SSEs feel that once we are caught, permanently we have to file the return. Okay, if that fellow deducts the tax at source, let it go, but I will not disclose my PAN number. If it is 2%, 1% TDS, there I saw many SSEs doing with such non-compliance. So keeping this practical problem, law brought a beautiful point. If the payee don't give to the payer the PAN number, then TDS is to be levied at 20% and remit the same to the government. Of course, if that is the case, TDS on lotteries and all, there also they may not give the PAN number and may ask you to deduct the tax at the rate of 20%. No. If rate prescribed in the Act is higher than 20%, at such higher rates. So write down friends, 206 AA. Requirement to furnish permanent account number, then in case if the payee fails to furnish permanent account number PAN, then tax shall be deducted. at higher of the following rates, at higher of the following rates. A, at the rate of 20%, B, at the rate in force, then 3, at the rate specified, at the rate specified in the relevant provision of this act, at the rate specified in the relevant provision of this act. See, sometimes what will happen is, some SSEs may make a request, sir, I don't have the taxable income, don't deduct the tax at source. Or some SSEs may come and request that, sir, our incomes is subjected to a lower rate, lower slab rates, kindly deduct the taxes at a lower rates. So for that they give the declarations. Those declarations need to be respected only if the PAN number is furnished. And in case declaration becomes invalid, then the deductor shall deduct the tax at the source in accordance with the provisions of subsection 1. That is, since you are asking me to quote a PAN number, if I quote a wrong PAN number, even you are quoting a wrong PAN number, will attract this particular provision that the deductor can deduct at a higher rate, that is at 20% and all. And if you are not furnishing this or furnishing a wrong PAN, then it is as good as you have not furnished the PAN. Then in all correspondence and communication, bills, vouchers and other documents sent by the payer to the payee or to the payee to the payer, quotation of the PAN number is a must. So these are the important aspects. Write down one more point, that is, no certificate under section 197 shall be granted unless application contains PAN. Similarly, one more point, declarations become invalid. Declarations becomes invalid in case if PAN is not furnished. In case if PAN is not furnished. Then friends, in case if wrong PAN is quoted, it shall be deemed that payee has not furnished, PAN. Friends, in this context, the point to be noted is, let us suppose Krishna Reddy is a professional. I need to pay to Krishna Reddy, say, some 10,000 rupees. He raised the bill, and that does not contain the PAN number. Then this is not a non-compliance with section 206 AA, because anyhow professional payments 194J, unless the amount exceeds the prescribed limit, there is no question of deducting the tax at source. Only when the provisions of TDS gets attracted, failure to furnish the details of the PAN will attract this 206A. If you are not getting covered by the TDS provisions, then not quoting or not furnishing the PAN is not a crime. So more particularly, when the payer need to deduct the tax at source, and if there is a failure on the part of the payee to furnish the PAN details, then 206A comes into play, and then the TDS will be deducted at a higher rate of 20%. Of course, if TDS rate is much more than 20%, then that higher rate. Now friends, here a small example to illustrate all this, what we have discussed. See, company pays 10 lakhs on 10/10/2011 as a professional fee to a professional firm, and that professional firm has not given the PAN. Of course, for this the answer is very straight. 194J says on professional payments the TDS is at 10%, and failure to give the PAN, it will attract the TDS at 20%. Then what will be your answer if the above case professional firm gives an invalid PAN or PAN belonging to some other firm? Y Chakravarti Associates PAN number दे दो बोल के मैं हमारा आर्टिकल्स को बता दिए. उन्होंने क्या करे, PS ज्योतिर्मय एंड एसोसिएट्स का पैन नंबर लगा के बिल को भिजा दिए. Then also it is as good as that Y Chakravarti Associates has not given the, what is its PAN, so it will also attract a TDS at a higher rate is a point. Since just now we have discussed all this question appears to be very simple. Then an individual gives a declaration in form 15G/15H to a company under section 197A that no TDS should be deducted as his income is below the maximum amount not chargeable to the tax, and that 15G and 15H does not contain the PAN. Just now we have discussed. In all declarations, in all applications, if you don't furnish the PAN, it is as good as you have not made such declaration or not made such a application. Then one more issue, a company makes an application to the assessing officer under section 197 for no deduction of TDS. The application does not bear the PAN of the company. It is as good as the declaration is not made. The PAN is not quoted means declaration is not made. Then a payment is made to a non-resident, and as per DTAA, double taxation avoidance agreement, TDS rate is 10%. However, the resident has not given the PAN. Such a non-resident has not given the PAN. Then section 206 AA overrides the entire income tax law. Even your section 90 which governs your DTAA And then naturally, since PAN is not given, permanent account number is not given, the deductor is obliged to deduct the tax at a higher rate, that is 20%. Although DTAA says 10%, your TDS provisions are more powerful than your DTAA, at least to this extent. 206AA is very clear. It overrides all provisions in the Act. Then friends, I move to the first section, section 192, TDS on salaries. See, when I am going through these sections, what I find is many of the sections just you should know what is the payment and how much is the percentage of TDS. But there are 3 sections to 4 sections where issues are also there, like your contractual payments 194C, rent 194I, and your professional payments 194J, and of course 192 on salaries. But out of those 3, out of these 4, I feel personally the biggest challenge is in deducting the tax at source on salary payments. Why, sir? What is the reason you are saying that it is the biggest challenge? Because there it is a fixed amount on which fixed rate. यहाँ पे क्या हो रहा, सैलरी में क्या हो रहा, 12 महीने रहता सैलरी, और वो एम्प्लॉई कहानी सुना देते हमको, मैं ये इन्वेस्टमेंट कर रहे हैं, वो इन्वेस्टमेंट कर रहे हैं, हमको ये लॉस है, वो सब है. बाद में पर्टिकुलर्स ही विल नॉट गिव, एविडेंस ही विल नॉट गिव, and in between there could be a revision of salary, whereas your TDS provision says you estimate tax obligation and divide with the 12, and every month you deduct the tax at source like that. Of course, fortunately this law says what? At a subsequent date, the amount of TDS to be deducted becomes more, because earlier deducted, in earlier months what you have deducted is less, then fortunately there is no interest that is being levied for that, because they also know practically the problems. There are some employees who will request, please don't deduct the tax at source this month, I have got so much of the, what is it, expenditure, and everything goes coolly like that. And finally in the month of January, employee will scold the finance person. What is it? पूरा TDS को यही मंथ, मार्च मंथ में डिडक्ट कर दिए तो हमारा फैमिली कहाँ गएगा, जाएगा? That fellow only make a request that kindly postpone, kindly postpone, kindly postpone. And finally in the month of the March, entire salary, let us suppose, is going for TDS only. So that is the reason why when you are there in the finance, you should be slightly harsh with the people, because the people to whom you gave the advantage only will scold you at the end, because that act of deducting the tax at source anyhow has to happen. But here in the law book it is stated that yes, it is to be done methodically by estimating the tax obligation of the salaried employee and spread it over the 12 months is a point. Now TDS on salaries, what we are saying, any person responsible for paying any income chargeable under the head salaries shall at the time of the payment deduct the income tax on the amount payable at the average rate of tax computed on the basis of the rates prescribed. And of course, sometimes it may so happen that on non-monetary benefits, employer may show over enthusiasm to pay the tax. Actually, it is whose obligation? It is the employee's obligation, which the employer want to meet. So it's a perquisite for the employee. Of course, 1010cc says what? It is being exempted. But now the point here is, how do you calculate the tax on non-monetary benefits? How do you calculate the tax on non-monetary benefits is something procedurally you have to learn. What it says, you forget about all his other incomes. You only see his salary income and non-monetary benefits, calculate the tax on it and make an average of it, and that average amount you apply on the non-monetary benefits. That is a tax obligation on the non-monetary benefits which the employer is agreeing to pay. So this is one important thing. So write down, friends, that is section 192, TDS on salaries. TDS on salaries. See, one thing is, if any person, whether individual, HUF or a firm or a company or AOP or BOI, that is liable to deduct the tax at source on the amount of the salary, irrespective of the fact whether the person is carrying the business or not. Even if I am not carrying any business, mine is a charitable institution, still if the employees are there and you are paying the salaries, and if those salaries are exceeding the maximum amount not subjected to the tax, then TDS is to be deducted. Of course, if that amount of the salary is not exceeding the basic exemption limit. What is the basic exemption limit? At this point, let us revise. That is, in case of males who are not senior citizens or super senior citizens, it is 1,80,000. If you are a woman SSC, not a senior citizen, not a super senior citizen, 1,90,000. Senior citizen, normally senior citizen bole to 65 years or more than 65 years. But now we brought down the same to from 65 years to 60 years. 60 years to 80 years we call them as senior citizens. तो उसका basic exemption limit क्या है? 2,50,000. In case if the resident individual attains age of 80 years or more than 80 years, then it is 5 lakhs is the basic exemption limit. So in case if our house is having a super senior citizen of 80 years or more than 80 years, that person is entitled for a basic exemption limit of 5 lakhs. वो बूढ़े आदमी को 5 लाख से ज्यादा इनकम कहाँ रहते साहब बोल के नहीं पूछना, right? This kind of classification is given for what purpose? So that household members give him due respect, because he is entitled for a higher exemption. See, people do so much of the mischief. On one hand we say India is a materialistic, that is not a materialistic country, but we encourage all this concept of materialistic attitudes. If that old man who crossed 80 years, who is waiting for his exit from this world, better he transfer all his assets. Of course, clubbing provisions are there. Irrevocable manner में देने के लिए एडवाइस देना, but the government says no Chakravarti, maybe there are few good people who will respect their old parents, but there are a number of cases where parents are not being properly treated. Let this categorization be there, and we are living in India where we should always believe in the concept of respecting the women and respecting the old people. That's where our RTC bus also, we have got separate seats for them. So let in the income tax law also, let them have the, different basic exemption limits. But of course friends, all this is only for the resident woman, resident senior citizen, resident super senior citizen. But if that woman or senior citizen or super senior citizen happens to be non-resident, for them only basic exemption limit is 1,80,000 only. So now all our point is, if salary is below this, then there is no need for deducting the tax at source. Then friends, TDS on salary is deductible at the time of payment. So thereafter there is no requirement to deduct the tax on salary, on the salary becoming a due or credited to the employee's account. Because under the salary side, what is the point? Salary becomes chargeable either on accrual basis or on receipt basis, whichever is earlier. If you are paying earlier, then deduction also should happen at the time of payment itself, because in all other cases, generally after giving a credit to the account, the payment comes. But with respect to the salaries, the law is very clear. On payment basis, you deduct the tax at source. Or other way around, to put it rightly like this, on payment basis, if you are deducting the tax, again on accrual basis, there is no need. Is a point to be communicated. So, another issue which we have is like, that is, if an employee is employed by 2 or 3 employers, then it is obligation on the part of the employee to furnish the details of the amount of salary which he is getting from other employers and what is the TDS that those employers are deducting at source. Only when such information gets provided here, then this employer will decide on how much of the tax is to be deducted at source. Other way around, if that information is not provided by the payee, this employer can very well treat that whatever he is paying is only the salary, and accordingly he will decide on how much of the TDS is to be deducted. Of course, if the SSE is having any other income, he can also provide the information of any other income, and accordingly at what rate the TDS is to be deducted and all, employer will decide. But in any case, with other incomes, TDS should not fall. TDS should get increased. That means if I am having a loss, which loss is entitled to be deducted against the salary income, let us suppose. So if I give such information of such loss, then with that loss my gross total income is going to come down, then we should not consider such losses. Except what? Loss from house property. Yes, lawmaker says that salaried employees, if they have got loss from house property, how the loss will come from in the house property, friends? When you have borrowed the money to construct or purchase a house property and you have got the interest without income, then automatically loss will come. So such a loss that they are asking you to consider and accordingly reduce the TDS. Write down, friends. Where an SSE gets salary below the basic exemption limit, below the basic exemption limit, then there is no obligation to deduct the tax at source. Deduct the tax at source. Then in case of an SSE, is having a loss from house property, then employer should deduct such loss from salaries, deduct such a loss from house property from salary, and thereafter should calculate the TDS, tax to be deducted at source. Then employer should also consider any other income if the information is provided by the employee. However, it may be noted that with consideration of other incomes, tax should get enhanced, and it should not be reduced. Then friends, these points you have to keep in the mind. There is no need to write as such. There is a situation. There is a foreign company. It has got an Indian subsidiary. It deputed some employee to India to render the services in India. And that employee is working for this particular subsidiary company. The foreign company employee came to India since his employer asked him to work in India for its subsidiary in India. Now what is happening? The Indian company is paying the salary, and even the foreign company is also paying the salary. I think all of you know. If I am working in Tata Consultancy Services, if I am asked to go to America for about 8 months, I will get 2 salaries. There for working in foreign country and for being here. But if it is proved that if it is proved that all what services that employee is going to render in a financial year is only for Indian operations, and nothing is paid for services that he is rendered or going to render in the foreign country, then in that situation, please do remember, while deducting the tax at source, the employer is under an obligation to consider even the foreign income of him also. The point here is what? When you are deducting the tax at source, and if the employee is getting income from two different employers, then you should also consider that income also. Now can this particular employee can say that, no, that is my foreign income and I am a non-resident, so that is not liable for any income tax in India, then why you consider that particular income here while deducting the tax at source on the income which I am getting in India? That's what the contention. Now the Supreme Court says what? That is, his contention we would have accepted it, provided the salary which he is getting in foreign country, in case if he is rendering services also there in the foreign country. The information with us is he don't render any services in the foreign country. That income is also that they are giving because just that fellow accepted to work in India. He is getting salary in foreign country as well as here. So you should also consider that income and deduct the tax at source in India, because under the head salaries, place of accrual is the place where the employee renders the services is a point.